All right. Good morning, everybody. My name is Mark Hodge, head coach at Rockwell Trading. And today we're going to take a look at the markets and give you your stock market update in the next 15 minutes or less. It is Tuesday, August 31st. And if we look at the S&P here, the S&P and NASDAQ making new records once again yesterday. S&P closing at record highs, the NASDAQ leading the way. NASDAQ up over 1% yesterday, also making new records. The Dow not quite participating in the party, up a little bit pre-market yesterday and then pulling back, settling with a 56-point loss. So yesterday, the Dow not joining that move with the S&P and NASDAQ, but quite a move there for the S&P and in particular the NASDAQ. Let me make sure that I'm sharing my charts here. There we go. So S&P up yesterday, NASDAQ up yesterday, Dow finishing slightly lower. Now, today, futures are pointing to a slightly lower start, but this is a minor drop. The indices across the board are down about 0.1%. So looks like we're going to open slightly lower, but overall, it's been a pretty impressive month here. Let's look at the S&P and let's go to a monthly chart. Looking at a monthly chart here, look at this. Look at this. Last time the S&P closed negative for the month was January. And this actually puts the S&P on a win streak here that with it being the last trading day of August, unless the S&P loses 3%, knock on wood, we don't want that. But unless the S&P loses 3% today, the S&P on track for its 7th consecutive monthly gain, which would be the longest winning streak in 4 years. The last time there was a win streak that was longer occurred back in December of 2017. So it looks like we're going to get 7 gains or 7 months of gains in a row here. S&P finishing the month strong, it looks like, up 3% before today's session. NASDAQ also up nicely for the month. There were a few down months in between, so NASDAQ not seeing the same monthly win streak, but up about 4% as we approach the last trading day of August. Dow up for the month, but the weakest of the bunch, up just over 1% looking at the month of August. So last trading day of the month, we'll see where we end up. Right now, futures point to a slightly lower start. Let's look at a couple of earnings stocks and some movers here. Let's start with Zoom. Zoom making some waves pre-market, and not the type of wave that you want if you are holding Zoom right now. Zoom down almost 15% pre-market. Now, they actually reported better than expected earnings. So they had an earnings beat, $1.36 earnings per share versus a $1.16 estimate. Revenue was also better than expected, coming in above $1 billion for the first time. But the company reported that growth rates have slowed. So, I mean, this just a textbook example of a pandemic winner here. Everybody using Zoom, Zoom becoming a household name during the pandemic, and just rocketing higher, getting up above $500 a share. 588 might be the high there for Zoom during this rally. Coming down to some normal levels here, trading at 347.50 yesterday and now below the 300 mark today on that earnings news. So strong earnings, but growth is something that we've seen. Can we keep this pace, especially with these pandemic winners continuing to add new subscribers, or will growth slow? And that seems to be the biggest concern right now for traders who are looking at Zoom pre-market. So Zoom set to open up lower. Looks like it's going to open up below $300 a share. Now Chico's, the retailer, CHS is the ticker. Down 8% pre-market. So this is actually getting worse. When I first looked at it, it was down 5% pre-market. they actually reported a surprise profit. So this is kind of a interesting move here because they reported 21 cents per share for their earnings, and the expectation was an 8-cent loss per share. They also reported better than expected revenue, and they said that it was their best second quarter in 8 years. So some real positive news for the company looking at second quarter earnings, but not reflected in the pre-market move with the company down, or the stock down almost 6% now pre-market. Another retail fashion apparel company, DBI, Designer Brands. So they are up almost 7% pre-market. They reported earnings that were better than expected at 32 cents better. And the footwear retailer, formerly known as DSW, saw comparable store sales up 84%, which was almost 4 times better than expected by analysts. So getting a little move higher here, up, breaking out of this channel here that we had in July and also August, looking at a positive start, the exact opposite of what we saw with CHS. A few other movers. Let's take a look at Robinhood here. Ticker HOOD. And we'll take a look under the hood, and we see that yesterday Robinhood down almost 7%, and adding to those losses, it looks like Robinhood dropping back down to or towards their IPO levels, where they opened up, they initiated their trading here publicly at $38 a share, at 42.43 pre-market. Why the drop? Well, there was some speculation that this was tied to news that PayPal is considering a launch of its own stock trading platform. We could look at PayPal and see what happened to PayPal yesterday, up 3.6% yesterday, up slightly pre-market. So yes, a PayPal stock launch or stock trading launch could potentially tap into Robinhood's business, and that could be a little bit of a concern for Robinhood. However, I think the bigger factor here is that SEC Chairman Gary Gensler said that a ban on payment for order flow is on the table, and this is how Robinhood makes most of its revenue. So if this were to take place, this would be a ripple into the markets and the brokers as a whole, because a lot of brokers actually do take payment for order flow. But Robinhood, that's their whole business model. That's how they were able to offer free stock trading commissions, which put pressure on other brokers to drop their commissions and eliminate stock commissions for most brokerages. So this would be huge news and bad news for Robinhood. So Robinhood down a little bit pre-market, losing 7% yesterday. For anybody who doesn't know what payment for order flow is, this is where a broker accepts payment from a market maker for directing orders to that market maker instead of through an exchange. So, in the past, you would have orders executed through major exchanges, right? You see those guys buying and or screaming buy and sell in the old days. That was the idea, where everything was going through centralized exchanges. Well, now you have these, offshoot operations where you can direct orders, and those market makers and companies will actually pay brokers to send orders their way. And the problem here is that it could be a huge conflict of interest, right? Because it doesn't necessarily guarantee that that's the best offer available or the fastest. Now, the brokers will argue that by doing so, they're able to keep commissions low or free when it comes to stock trading. So there's a benefit there to the customer or the trader. But it looks like this idea is definitely under scrutiny, and there could be some concerns over it, which would have a huge impact on Hood, could have an impact on other brokers as well, although many of the other brokers are also making money in other ways, where Robinhood's whole business model is based on this payment for order flow concept. So we'll see what happens here, and whether or not the SEC chair really pushes that, and if there are some changes. Let's look at another mover pre-market, SPCE, Virgin Galactic, after the big flight, taking a pretty big hit, settling down around $25 a share, up about 3% pre-market. This comes on an analyst upgrade. Jefferies initiated coverage with a buy rating, saying that they expect that ramping up in capacity and growing demand will help the company and help the stock up a little bit pre-market, just under 3% as we approach the opening bell. Another stock getting some meme or Wall Street bet love. This is support.com, SPRT. This one popped up yesterday with a 38% gain. I mean, look at this stock just coming out of nowhere in early 2021. Pretty huge move yesterday, down a little bit today, but it looks like this one jumped on the radar of meme traders and the Wall Street bets crowd, and getting a pretty big move yesterday, up 38%. We could take a look at the classics here. GME after the big rally on the 24th, not doing a whole lot, up over 1% pre-market, but not a whole lot of movement there. We could look at AMC Entertainment. AMC getting a little action yesterday, up 6% and up 2% pre-market, but we see that with this one, a 2% move is pretty much par for the course. Let's look at Moderna, MRNA. So Moderna in the news for the wrong reasons yesterday, losing 3%, and that was over some vaccine contamination concerns. Up just over 1% today with some positive news. A study published by the Journal of the American Medical Association said that Moderna's vaccine produced more than double the antibodies that were produced with the Pfizer-BioNTech vaccine. So not a huge move pre-market, but making up some ground after yesterday's drop there. One last thing, South Korea getting in on the action and on the Apple and Google app fight here. We can take a look at Apple, see if this is having an impact on Apple. Not really. Apple down 0.4%. And if we look at Google or Alphabet, Apple not moving pre-market. But South Korea is first country to pass a bill to prevent Apple and Alphabet's policies that force developers to use the two companies' proprietary billing systems, which can charge commissions as high as 30% for in-app transactions. So this is a fight that probably isn't going to go away, and we'll see how Google and Apple respond, since they kind of have a monopoly on their app payment systems, and whether or not that's right because of their phone systems is to be argued, but that's definitely an issue that is going to keep coming back. We'll see where that all ends up. Anyway, as we head up into the open, down just a little bit pre-market, looking at futures. Not some big moves, but we are slightly lower. That's going to do it for today's stock market update for the mastermind members. I'm going to see you in just a minute in our Zoom room so we could trade the markets together. For the rest of you, we will see you tomorrow. If you like this video, please like it. And until then, happy trading, everybody.